Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. If you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnam Stock Market entry with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Nguyen. She's a personal financial advisor. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trinh Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about CTR. Viettel Construction is a subsidiary of Viettel Group, the #1 telco in Vietnam. CTR provides construction, operation, system integration, and infrastructure leasing services, mainly for telecom carriers. CTR targets to become the largest telecom infrastructure leasing firm telco in Vietnam by 2025. As you can see on the screen, this is the report which was collected by Viet Capital Securities about Viettel Construction CTR, with the current price is 48,150 Vietnam dong. Target price 83,500 Vietnam dong. Previous target price 89,800 Vietnam dong. Upside to target price more than 73.4%. Dividend yield 1.7%. TSR more than 75.1%. Telco continues to lead roles. Construction too slow. We maintain our buy rating for CTR as we expect the company to continue its strong EBITDA growth, which will be spearheaded by the infrastructure leasing telco segments. We cut our target price by 7% mainly due to one, a 40 basis point increase in our WACC assumption and 14% cut in our target EV per EBITDA multiple in addition to two, a 17% cut in our aggregate 2023 forward 2026 forward EBITDA for CTR's telco segment. We expect a 22% CAGR in CTR's EBITDA compared to previously 31% in 2022-2025 forward, led by a 42% CAGR in telcos EBITDA compared to previously 48%. We forecast telcos EBITDA contribution will jump from 22% in 2021 to 42% in 2025 forward, compared to previously 41%. For 2023 forward, we forecast CTR's revenue at 10 trillion Vietnam dong, $476 million, more than 11% year-over-year, with net profits after tax MI of 429 billion Vietnam dong, $19 million, more than 7% year-over-year. The increase in top and bottom lines is led by the telco segments, but hampered by the sluggish growth of the construction segments. Per our projection, CTR's 2023-2024 forward EV per EBITDA are 9.6 times 7.8 times, resulting from the company's robust EBITDA growth outlook and rising contribution from the telco segment. Risks to our positive view, slow mobile data consumption growth, Viettel prioritizing its ownership of towers instead of outsourcing to CTR, unwillingness to share towers among telcos. Telcos EBITDA growth momentum to continue in 2023 as a result of the challenging economic conditions expected in 2023. We believe telco EBITDA will increase by 56% year-over-year due to this segment's low sensitivity to economic uncertainty. Moreover, we expect 2,500 new towers will be completed each year due to robust 4G data consumption. We expect the tenancy rate to be 1.03 in 2023 and 1.05 in 2025. However, we expect the leasing rate per telco will decrease following CapEx per tower decelerated in 2022-2023 forwards. According to management, CTR is currently developing a smaller tower model that has a lower investment cost. In 9 months 2022, we estimate CapEx per tower decreased 17% compared to forward year 2022. Residential construction revenue to decrease amidst economic headwinds. We believe the growth of CTR's B2B residential construction segments will decline in 2023 due to the gloomy short-term outlook of the real estate sector. As a subsidiary of Viettel Group, we expect that CTR will have a significant amount of construction contracts for social housing, state budgets, capital projects, and other telecom infrastructure, which will partly offset the construction of the residential segments. For 2023 forwards, we project construction revenue to edge up 2% year-over-year with an EBITDA margin of 9.4% compared to 9.3% in 2022 forward. Now let's move to the 9 months 2022. Strong growth momentum in top and bottom lines across segments. Figure 1, CTR's 9 months 2021 and 9 months 2022 results. Operation. BCSC comments on 9 months 2022. Growth momentum continued as it was driven by Viettel's mobile telecom network expansion and fixed line broadband subscriber growth in the domestic market and to a much smaller extent in Myanmar. There were 6,735 towers at end September 2022. Tower code. The robust growth was mainly driven by the contribution of leased towers. In 9 months 2022, CTR built 1,528 new towers, completing 80% of our 2022 full-year forecast. As of September 2022, there were 3,949 towers, with a tenancy rate of 1.03. Construction. We believe that this growth was mainly driven by CTR's expansion of its residential construction business compared to a low base in 2021. In 9 months 2022, there were 1,081 signed contracts for B2C residential projects with a total value of 1 trillion Vietnam dong, $41 million. The B2B residential backlog value was 1.8 trillion Vietnam dong, 73 million US dollar. Meanwhile, CTR's Vivo Integrated Operations Center construction was implemented 1,727 out of 10,000 communes in Vietnam. Tower Co. VCSC comments, mainly due to lower contributions from distributed antenna systems, optical fiber, and solar energy leasing that have higher gross profit margins. Construction, we attribute the contraction to higher input costs. And next, study 2022 forward. 7% cuts in telco EBITDA forecast mainly due to lower telco leasing and tenancy rates. Telco VCSC comments on new 2022 forward. We cut our projected tenancy rate to 1.03 compared to 1.06 previously as 9 months 2022 results trailing our forecast. We assume lower telco leasing rates, which is driven by lowering our total cost per new tower assumption. As of September 2022, we estimate CapEx per tower decreased 17% compared to year-end 2021. Construction, we expect construction in the B2B sector will slow in Q4 2022 due to the relatively negative outlook of the real estate market. Towerco, mainly driven by our low capital expenditure assumption. Construction, mainly driven by the volatility of raw material costs. EBITDA margin, mainly driven by the adjustment in revenue and EBITDA of the telco segment. Now let's go on to the next part is 2023 forward. Robust growth of telco segments should be partly offset by gloomy construction outlook. Operation, we expect Viettel's tower count in Vietnam to rise by a low single-digit rate, while Viettel's number of fixed line subscribers will increase at a double-digit rate in 2023. TowerCo, we expect CTR's tower count will expand to 7,300 by year-end 2023, while the tenancy rate will remain 1.03. We expect a lower contribution of other assets, leasing revenue at 13% in 2023 compared to 20% in 2022. Construction, we expect CTR's residential construction in 2023 forwards will be dampened in the short term, especially the B2B segments due to strict regulations for capital rising and increased interest rates. System integration and others, mainly driven by the expansion of smart services such as smart lighting systems and security camera system in rural areas. EBITDA, EBIT, PBT, and PATMI, net profit after tax MI, and EBITDA margin. And now I will share with you the valuation. And this update report will roll our target price horizon forward from mid-2023 to year-end 2023. We maintain a 50-50 mix of DCF and EV, EBITDA based sum of the parts methods to value say CTR. We select the EV, EBITDA based sum of the parts method due to CTR's diversified and capital intensive business. Meanwhile, the DCF method captures CTR's growth and cash generation abilities over the long term. Our selected peer group for CTR consists of towercos and emerging Asian markets. In addition, we discount our target EBITDA multiple by 14% following our 100 basis point increase in our cost of equity assumption. For the DCF method, we keep our estimated unleveled better of 6.6, 0.6, 0.8 unchanged based on the average beta of CTR's peer studies weighted by CTR segmentals. EBITDA contributions in 2023 forward, 2027 forward. Furthermore, we raised our WACC assumption by 40 basis points to 10.2% as a result of our increased cost of equity assumption. Our DCF valuation yields a higher fair values than our EBITDA approach, as the former better captures CTR's strong projected cash flow and earnings growth over the long term. Meanwhile, our EBITDA approach mainly reflects 1 year forward earnings growth. Operation. In line with the towerco segment's beta, due to the close relationship between the two segments and the operation segment's predictable revenue streams. Towerco, based on the 5 years average of peer medium betas, construction equal to our beta for Vietnam's leasing constructor consequence. System integration. System integration business shares some similarities with the construction business, such as project-based revenue and B2B clients. Tier 6 DCF valuation for CTR. Tier 7 cash flow projections for CTR. Tier 8 and Tier 9. Comparable peers. Tier 10 towncodes in emerging Asian markets. Towncodes in developed markets. CTR's TTM EBITDA compares to peers. CTR is the red color. Here you can see on the screen. Recommendation history with market price and target price. Glossary. Financial statements. And that brings me to the end of my presentation about CTR. Hope this video and some information will be useful for you. And if you want to open a legal trading account, please contact us with the information on the screen so that we can assist you. Thank you for your attention and see you next time.